Hi everyone, today we'll be going over accounts, May June 2020, paper 3-1, question number 6. This is structured paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 6 is a part of section B, which deals with cost and management accounting. So without any further delay, let's get started. V Limited manufactures 2 products, standard and premium. Then the following budgeted information for 2020 is available. The units produced and sold for standard is 10,000 and for premium it seems to be 4,000. The direct materials cost per unit for standard is $20, whereas for premium it is $30. And then regarding the direct labor, we are given the hours required in order to produce 1 unit and the rate per hour as well. So we can easily figure out the direct labor unit cost by multiplying these two factors together for both the standard as well as premium. For direct labor per unit cost for standard, that will be 3 times 18, which is the hours per unit times the rate per hour, which gives our direct labor cost per unit to be 54 for standard. Now we repeat the same process for premium. That will be the direct labor hours per unit of 5 times the direct labor rate per hour of 18, which gives the direct labor cost per unit for premium to be 90. Alright, then the budgeted factory overheads, 240,000, are to be allocated to the products on the basis of direct labor hours. Okay, so let's figure out the total direct labor hour for standard. Total direct labor hours. Alright, then for standard, we know that the hours per unit is 3 and the total unit produced is 10,000. So we can just multiply these two together in order to figure out our total direct labor hours. So that's going to be 10,000 times 3, which results in 30,000 direct labor hours for standard. Now we repeat the same process for premium. So we can see that the hours or the direct labor hours per unit for premium is 5, whereas the total unit produced and sold is 4,000. So we just multiply these together. That's 4,000 times 5, which results in the total direct labor hours for premium to be 20,000. Now we figure out the total for both the standard and premium, meaning that we add these two values. So that's going to be 30,000 plus 20,000, which results in 50,000. So what we know is that out of 50,000 total direct labor hours, 30,000 belong to standard, whereas 20,000 belong to premium. And on this basis, we will be allocating our budgeted factory overheads. Okay, so that's factory overheads. Now let's figure it out for standard. We know that we have the total factory overheads of 240,000 and we need to allocate it on the basis of direct labor hours. We know that 30,000 direct labor hours out of the total of 50,000 belongs to standard. So that's times 30,000 divided by 50,000, which results in the factory overheads for standard to be 240,000 times 30,000 divided by 50,000, which results in 144,000. Now we repeat the same process for premium. We start with our total factory overheads of 240,000, and we know that out of 50,000 direct labor hours, 20,000 belongs to premium. So that's going to be times 20,000 divided by 50,000, which results in the factory overheads for premium to be 240,000 times 20,000 divided by 50,000, which results in 96,000. Okay, now let's move to our first question. We need to calculate the total production cost and the unit cost for each product. Let's start with the total production cost. Okay, so this is for standard and this is for premium. Since we're talking about cost, we can start with our direct materials cost. And we're going to figure out the total. Okay, so what we know is that the direct material cost per unit is 20, and we require the total direct material cost for 10,000 units of standard. So that's just going to be 20 times 10,000, which results in our direct materials for standard to be 200,000. Let's repeat the same process for premium. We know that the direct materials unit cost is 30, whereas we are producing total units of 4,000. So we require the direct materials for a total unit of 4,000. That's going to be 30 times 4,000, which results in the total direct materials cost for premium to be 120,000. Let's substitute these two values into our statement to figure out the total production cost. So that's 200,000 for standard and 120,000 for premium. Now we can move towards the direct labor costs. Let's have a look above. We know that the direct labor cost per unit is 54 for standard. We require the total direct labor cost for 10,000 units. So that's going to be 54 times 10,000, which results in the value of 540,000. That will be the total direct labor cost for standard. Now we repeat the same process for premium. We know that the direct labor cost per unit is 90. And we require the direct labor cost for total of 4,000 units. So we just multiply these together. And this gives our total labor cost for premium to be 360,000. Let's record these two values into our statement. So that's 540,000 for standard and 360,000 for premium. Now our next cost will be that of factory overhead. Let's have a look above. We can see that we already figured out our factory overheads for standard to be 144,000 and for premium it was 96,000. So let's substitute these two values into our statement as well. That is 144,000 for standard and 96,000 for premium. So now we can easily figure out our total production cost. Alright, for standard, that is just going to be the sum of these three values. So that's 200,000 plus 540,000 plus 144,000, which results in the value of 884,000. We repeat the same process for premium. That's going to be the sum of these three values. That's 120,000 plus 360,000 plus 96,000, which results in the value of 576,000. Okay. And we also need to figure out our unit cost, right? So if we have the total production cost, then in order to figure out the unit cost, we just divide our total production cost by the total number of units produced. For the case of standard, the total production cost is 884,000. And we know that our total units produced was 10,000. So we just divide it. And this gives our unit cost for standard to be 884,000 divided by 10,000, which results in the value of 88.40. Let's repeat the same process for premium. We have our total production cost to be 576,000. And we know that the total production units for premium was 4,000. So let's just divide it. And this will give our unit cost for premium to be 576,000 divided by 4,000, which results in the value of 144. This concludes the first part of this question. Now we can move to the second one. We are given additional information. V Limited normally adds 40% to the cost of each product to set the selling price. So this just means that selling price will be cost plus the 40% of cost. So we can write it down as 0.40 times cost. This means that the selling price will be 1 cost plus 0.40 cost, which we can write down as 1.40 cost. Okay. Then for the second part of this question, we need to calculate the unit selling price for each product. We already have the formula in order to figure out the selling price. So for standard, that will be the unit cost times 1.40. And we figured out our unit cost to be 88.40. Let's write it down. And in order to figure out the selling price, we just need to multiply it with 1.40. And this gives our selling price per unit for standard to be 88.4 times 1.40, which results in the value of 123.76. Let's repeat the same process for premium. We need our unit cost for premium, which we figured out to be 144. Let's substitute that. And we just need to multiply it with 1.40. Now this gives our selling price per unit for premium to be 144 times 1.40, which results in the value of 201.6. This concludes the second part of this question. Now we can move towards the third one. We are given additional information, and for the third part of this question, we need to define the term cost driver. So cost driver is basically an activity which results in a specific cost being incurred. Let's write it down. Cost driver is an activity which results in a specific cost being incurred. Okay, this concludes the third part of this question. Now we can move towards the fourth one. We need to state 3 benefits of adopting ABC. So ABC just means activity-based costing, right? And the very first benefit of ABC would be that it leads to a better decision making in terms of pricing. Let's write it down. Better decision making for pricing. Then we also know that activity-based costing leads to better profitability analysis among products. Let's write it down. Better profitability analysis among products. And this is due to the fact because, as the name suggests, this is activity-based costing, right? So we will be dividing our costs on the basis of the activity for each department or each product. So that leads to better allocation of overheads among different products, which leads to a better or true profit, and which again leads to a good profitability analysis compared with other costing methods. And similarly, activity-based costing also results in better distribution of costs among each product, right? So we can write it down as well. Better ascertaining product costs. Okay, so this concludes the fourth part of this question. Now we can move towards the fifth one. We need to calculate the total production cost and unit cost for each product if activity-based costing is used. And we were given additional information above, which we skipped. So now let's get back to that. V Limited is considering implementing an activity-based costing system. The management accountant has prepared the following cost analysis. So whatever we figured out for our direct material cost and direct labor cost, that's going to remain unchanged because we are now distributing our fixed overheads on the basis of these activities. So the first one is materials handling, and the cost driver is the number of purchase orders, meaning that the distribution of materials handling among standard and premium would be done on the basis of number of purchase orders. All right, let's do that. So let's first figure out the total number of purchase orders. That's just going to be 30 for standard plus 10 for premium, which results in a total of 40. And let's divide our materials handling cost. Okay, for standard, we will obviously start with the total materials handling cost, which is given to be 80,000. And we can see that out of the 40 purchase orders, 30 belongs to standard, and this is our basis for division. So we just multiply it with 30 out of 40. So this gives our materials handling for standard to be 80,000 times 30 by 40, which results in the value of 60,000. Let's figure the same for premium. Again, we'll start with the total of the materials handling, which is 80,000. And we know that out of 40 purchase orders, 10 belongs to premium, and that is the basis for our apportion. So we can just multiply it with 10 by 40. This gives the materials handling cost for premium to be 80,000 times 10 by 40, which results in a value of 20,000. All right, now we repeat the same process for machine setups. And the cost driver is actually the number of setups. Let's figure out the total. That's 65 for standard plus 25 for premium, which results in the total to be 90. Okay, now let's distribute the machine setups cost. We'll start with our standard. And we will be starting with the total machine setups cost. So that is 90,000. And what we also know is that out of 90 setups, 65 belong to standard. And since this is our basis of apportionment, we can just multiply with 65 by 90, which gives the machine setup cost for standard to be 65,000. Now we repeat the same process for premium. That is going to be the total of machine setups, which is 90,000. And we know that out of total of 90 setups, 25 belong to premium. And since this is our basis for distribution of cost, we can just multiply with 25 by 90, which results in the machine setups cost for premium to be 90,000 times 25 by 90, which results in a value of 25,000. All right. So the last one we have is that of inspection. And the basis for apportionment would be number of units produced. And we know that for standard it was 10,000 and for premium it's 4,000. Let's figure out the total. That's just going to be 10,000 plus 4,000, which results in 14,000. All right, let's distribute this. For standard, that's going to be the total cost of inspection, which is 70,000. And we know that out of the 14,000 total units, 10,000 belong to standard. So that's going to be times 10,000 divided by 14,000, which results in inspection cost for standard to be 70,000 times 10,000 divided by 14,000, which results in the value of 50,000. Now we repeat the same process for premium. That's going to be the total inspection cost of 70,000. And we know that out of the total units of 14,000, 4,000 belong to premium. So that's times 4,000 divided by 14,000, which results in the inspection cost for premium to be 70,000 times 4,000 by 14,000, which results in the value of 20,000. So now we can move towards figuring out the total cost on the basis of activity-based costing. So that's standard and premium. And we have direct materials and direct labor. And we know that these remain unchanged. So let's have a look above. We figured the direct materials for standard to be 200,000, whereas for premium it was 120,000. Let's substitute these values. So that's 200,000 and 120,000. Let's have a look again. For direct labor, we figured it out to be 540,000 for standard, whereas it was 360,000 for premium. Let's substitute these values again. So that's 540,000 and 360,000. Now we move towards our overheads. Okay, let's have a look above. We had 3 overheads. So the first one is materials handling, machine setups, and the third one is inspection. Let's write it down. So that's materials handling, machine setups, and inspection. Okay, we already figured out the values for these 3 activities. And for materials handling, standard will have the value of 60,000, whereas premium will have the value of 20,000. Let's substitute this. So that's 60,000 and 20,000. Again, let's have a look for machine setups. We figured out for machine setups, the standard is going to have the value of 65,000, whereas premium is going to have the value of 25,000. Let's substitute these values. So that's 65,000 for standard and 25,000 for premium. And finally, we have our inspection, which we figured out to be 50,000 for standard and 20,000 for premium. Let's substitute this value as well. 50,000 and 20,000. Okay, now we can easily figure out our total production cost. For standard, that's going to be the sum of these 5 items. So that's 200,000 plus 540,000 plus 60,000 plus 65,000 plus 50,000, which results in the value of 915,000. And for premium, that's going to be the sum of these 5 amounts. So that's 120,000 plus 360,000 plus 20,000 plus 25,000 plus 20,000, which results in the value of 545,000. Okay, and we are also told to figure out our unit cost for each product. And we know that if we already have the total production cost as well as the total production unit, we can easily figure out the unit cost by dividing the total production cost by our total production units. And for standard, we figured out our total production cost to be 915,000. And we know that our total production unit for standard was 10,000. So this gives the unit cost for standard to be 915,000 divided by 10,000, which results in the value of 91.5. Let's repeat the same process for premium. We have the total production cost of 545,000. And we know that the total production unit for premium was 4,000. So this gives our unit cost for premium to be 545,000 divided by 4,000, which results in the value of 136.25. So this concludes the 5th part of this question. Now we can move towards the 6th one. Okay, we were given the working section, so instead of scribbling all over the question paper like I did, you guys should be showing your workings for those division of cost on the basis of activity on this section. Okay, now for the 6th part of this question, we need to calculate the unit selling price for each product if activity-based costing is used. And we figured out that the sales price would just be the unit cost times 1.40. So we will be using this basis. Now for standard, let's have a look above for its unit cost. We figured it out to be 91.5. So that's going to be 91.5 times 1.40, which gives the unit selling price for standard if activity-based costing is used to be 91.5 times 1.40, which results in the value of 128.1. Now we repeat the same process for premium. Let's have a look above for its unit cost. We figured it out to be 136.25. Let's substitute this value. And we multiply it with 1.40. So this gives the unit selling price for premium if activity-based costing is used to be 136.25 times 1.40, which results in the value of 190.75. Alright, this concludes the 6th part of this question. Now we can move towards the 7th one. We need to explain the difference in total production cost for each product in respect of A and E. So we know that the difference in total production cost for each product is due to the difference in overhead charged, because previously we charged the total overheads, whereas for activity-based costing we divided the overheads on the basis of different activities. Let's write it down. The difference in total production cost for each product is due to difference in overhead charged. So let's figure out the per unit overhead cost for each of the absorption costing as well as activity-based costing for both products. So we can make a table, standard and premium, and this is based on absorption costing and activity-based costing. All right, and we are writing down our overheads per unit. Okay, let's have a look above for our absorption costing. Okay, we figured out our overheads for standard to be 144,000, whereas for premium it was 96,000. And now we require the per unit. So we just need to divide the total with their respective total units produced. For standard, that's total overhead of 144,000 we need to divide it with the total units of 10,000. So this gives the per unit overhead for standard to be 144,000 divided by 10,000, which results in the value of 14.4. Now we repeat the same process for premium. That's going to be the total overheads of 96,000. And we need to divide it with their total units produced. And for premium, it was 4,000. So this gives the per unit overhead for premium to be 96,000 divided by 4,000, which results in the value of 24. And these are the overheads per unit on the basis of absorption costing. So let's substitute these values. Okay, under absorption costing for standard, we figured it out to be 14.4, whereas for premium, it was 24. Now we figure out the overhead per unit under activity-based costing. And our overhead is actually the sum of materials handling, machine setups, and inspection. So for standard, the total overhead is going to be 60,000 plus 65,000 plus 50,000, which results in the value of 175,000. And we just divide it with the total units, and for standard, it was 10,000. So this gives the overheads per unit for standard to be 175,000 divided by 10,000, which results in the value of 17.5. We repeat the same process for premium. The total overhead is 20,000 plus 25,000 plus 20,000, which results in the total of 65,000. And we just need to divide it with the total units produced, and for premium, it was 4,000. So this gives the overhead per unit for premium to be 65,000 divided by 4,000, which results in the value of 16.25. And these are the overheads per unit on the basis of activity-based costing. Let's substitute these values. So under activity-based costing, we figured the overheads per unit for standard to be 17.5, whereas for premium, it was 16.25. So we can see that standard charges a higher overheads per unit under activity-based costing. Let's write it down. Standard charges a higher overhead per unit under activity-based costing. And we can see that premium charges a higher overhead per unit under absorption costing. Let's write it down. Premium charges a higher overhead per unit under absorption costing. Alright, this concludes the 7th part of this question. Now we can move towards the 8th one. We are given additional information. V Limited plans to manufacture only the premium product from 2021. So they're going to drop this standard product. And now for the 8th part of this question, we need to explain why V Limited would find activity-based costing useful in 2020 but not in 2021. So we use activity-based costing in 2020 for both the product standard as well as premium, but in case of 2021, there is not going to be any standard product. There is only the premium product. Okay, first we need to list down the impact of activity-based costing in 2020. So obviously, if you're talking about activity-based costing, it allows a fairer allocation of overheads because it is based on the activities consumed. Let's write it down. And this is true because in 2020, we are manufacturing two products, standard and premium. So in this way, there is fairer allocation of overheads among these two products on the basis of the activities consumed by each of them. Now, secondly, we need to write for 2021. And we know that for 2021, we are stopping the production of standard product, right? This means that activity-based costing is not appropriate because if V Limited is only producing one product, then we know that all the overheads are attributable to that particular product. Let's write it down. It is not appropriate to adopt ABC if V Limited only produces one product. As all the overheads are attributable to that product. So this concludes the 8th part of this question as well as this entire question. And if you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.